In this video, we are going to talk about Nio Stock Analysis. So before starting this video, please like this video, and subscribe to our channel for the future updates. Nio exploded onto the scene in 2021, setting a new high for EV deliveries in the first quarter. However, even as China's Tesla expands in Europe, a worsening global chip shortage and declining sales of electric cars in China pose a challenge. Is Nio stock a good investment right now? When Nio first appeared on the scene, it had no prior experience with vehicle manufacturing. It did, however, pledge a promising future. Weili, its Chinese name, means blue sky approaching. Nio doesn't produce its own electric vehicles. Instead, it collaborates with Zhonghuai Automobile Group. Nio came back from the verge of bankruptcy last year by more than doubling sales of its luxury electric SUVs. However, it is facing supply issues as well as increased competition from Chinese tech and auto behemoths, as well as Tesla TSLA. As a result, Nio's stock has nearly halved from its peak of 66.99 on January 11th. Let's start. Nio earnings and fundamental analysis. Nio lags on main earnings and other fundamental metrics. It's a young, fast-growing business that's always trying to make a profit. On a scale of A+ to worst E, Nio stock receives a 49 out of 99 EPS rating and ADSMR rating. The earnings per share, EPS, ranking compares a company's earnings performance to that of other firms. Sales growth, profit margins, and return on equity are all factors in the SMR rating. Overall, EV sales in China dropped 12% in April compared to March. Nio's April revenues were down 2% month-over-month but up 125% year-over-year. Meanwhile, Tesla's April sales in China dropped by 27% due to safety and quality concerns. Nio recorded a larger than expected first quarter loss on April 29. Nio lost 48 cents per share despite a 529% increase in sales to $1.22 billion. Nio's gross margins improved from quarter to quarter, and it generated positive cash flow from operations. Nio delivered 20,060 premium electric SUVs in 2018, a 423% increase over the previous year. Although growth is high, Nio expects output to only slightly increase. Nio is expected to cut its losses in 2021 to 52 cents per share, down from 66 cents in 2020, according to analysts. According to Zacks Investment Research, revenue will more than double to $5.16 billion in 2021. In 2022, it is projected to lose 2 cents per share as revenue increases by 81%. According to Zacks, 5 Wall Street analysts rate Nio stock as a buy, 4 hold, and none sell. Due to the worsening chip shortage, Deutsche Bank analysts now expect 95,000 deliveries in 2021, up from 43,728 in 2020 but down from a previous estimate of 100,000. Nio stock technical analysis. According to MarketSmith Chart Review, a February breakout past a 57.30 entry failed, and there is no new buy point in sight. For the first time since the pandemic began in early 2020, Nio stock fell below its 200-day average in mid-April and again on May 10. It is still trading well below a declining 50-day line. This year, the relative strength line for Nio stock has dropped. For the majority of 2020, it rallied strongly. A stock that has a growing RS line is outperforming the S&P 500 index. It's the blue line in the diagram. In September 2018, Nio stock went public at a price of $6. Due to revenue and cash flow issues, it fell to a low of 1.19 in late 2019. With a rebound in electric vehicle sales in 2020, the stock skyrocketed. The stock receives a 59 out of 99 IBD composite rating. In a single score, the ranking blends main fundamental and technical metrics. A near-perfect 98 rupees rating, on the other hand, far exceeds the 80 or higher that top growth stock investors would like to see. Over the past 13 weeks, Nio's accumulation distribution rating of C represents roughly equal buying and selling by large investors. Nio has a lot of institutional support. As of March, 820 funds own shares in the company. According to the IBD stock checkup method, Nio has 8 quarters of growing fund ownership. The auto manufacturers industry group is represented by Nio stock. IBD tracks 197 industry categories, and auto manufacturing is ranked 105th. Outlook for Nio EV stocks. China's Nio, Li Auto, and XPeng are widening their operations to compete with Tesla on home soil as the EV war heats up. In the second half of 2021, Nio plans to raise EV production capacity to 10,000 units per month. In the first quarter of 2022, it plans to sell 150,000 units per year. Due to a chip shortage and high demand for its new, longer-range batteries, it's currently limited to 7,500 units per month. Analysts are optimistic about both China and global EV sales, which is good news for Nio stock. According to the China Association of Automobile Manufacturers, EV sales in China are projected to increase by more than 30% to 1.8 million units by 2021. According to IHS Markit, global EV revenues are projected to increase by 70% by 2021. However, at the start of 2021, China cut EV subsidies by 20%, a step that could have an effect on Nio. New and upcoming electric vehicles, such as the EC6 and ET7, are expected to drive Nio's development. The ET7, an electric sedan, could be the first to feature a solid-state battery and a range of 600 miles. Meanwhile, Nio's business model revolves around battery swapping technology. Nio announced a battery subscription plan in 2020. The car and the battery are, in essence, sold separately. Users can save money by purchasing Nio EVs without batteries and renting batteries for a monthly fee. They also have the option of swapping car batteries based on their requirements. Nio expects its autonomous driving system to produce recurring subscription revenue in the future. Is Nio stock a buy now? Fundamentally, Nio's financial situation is improving after debt and liquidity concerns slammed the stock. Nio is reducing losses while increasing top-line revenue. Following strong sales in China, Nio's plans to expand globally promise even more room for expansion. It is also developing new battery technology. However, the EV wars are heating up as legacy automakers and tech behemoths ramp up or join the fray. The chip supply shortage is a headwind for automakers in the short term. Battery supplies could be an even bigger headwind for EV stocks in the long run. China's total EV sales reportedly fell by double digits last month, signaling a possible warning sign for one of the world's largest markets for electric vehicles. Nio stock is in a bear market from a technical standpoint. It might take some time for a new trend or buy point to appear. After a good rally last year, its RS line is lagging. It has recently breached main support thresholds, including the 200-day line, which is a longer-term line. Nio stock forecast for 2021. With a low estimate of $13.50 per share and a high estimate of $80.30 per share, the average price target from 17 analysts who have released a Nio share price forecast is $51.19 per share. 10 analysts recommended buying the stock, while 7 others suggested keeping it. After the company's earnings report on March 2, analysts at Deutsche Bank affirmed their Nio stock price estimate of $70 per share. They praised the company's first quarter guidance and increased their forecast for 2021 deliveries by 6,000 to 96,000, putting it on track to be the industry leader in China's premium EV market. Longer term, we see many areas of untapped development, including developing a separate brand for the mid-tier, mass market, potentially with partner, incremental volume in Europe. Sales begin later this year and few investors give Nio any credit for success there, and recurring software subscription revenue from NAD, Nio Autonomo. The Deutsche analysts wrote in a note to clients on the Nio outlook. We believe the company will invest actively to extend its capacity, service network and develop its autonomous driving software, engineering capabilities with sufficient capital exiting 2020. We maintain our $70 price goal, which is focused on a 10x 2023 EEV sales multiple, and assume that recent stock weakness represents a buying opportunity. On March 10, analysts at Japanese bank Mizuho initiated coverage with a $60 Nio share price forecast, recommending the stock as a purchase. Nio Inc. investment alerts. Many investors see continued market turmoil as an opportunity to buy more stocks at a lower price or to sell short to benefit from a bearish trend. If you're one of those investors, make sure you know what you're getting yourself into. Nio's investment warnings are computer-generated signals that are important enough to either support or question your investment decision in Nio Inc. These notifications will assist you in understanding what you're purchasing and avoiding costly mistakes. During the first quarter, the company plans to produce 20,000 to 20,500 cars, up 421 to 434% from the first quarter of 2020 and 15 to 18% from the fourth quarter. Total sales are expected to increase by 438.1 to 450.8% year-over-year in the first quarter, to between $1.13 billion and $1.16 billion. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.